Hi everyone, Nick here, Benzinga, MarketFi create income with option spreads, recapping week ending 4/17 on a Thursday. Tomorrow is a day off, Good Friday. So I'm going to do the run through today instead of tomorrow. And what we had here today is a pretty impressive day, although not so reflected by the actual results. In other words, it's not a plus 1% day. But the reason it's impressive is that it could have been disastrous given what happened today. A whole bunch happened, mainly, first and foremost, are the moves, the reaction to the earnings in Google and two heavyweights, Google and IBM. Both were not well received by the markets, and they were punished accordingly. Yesterday, Google, after the market closed and they reported, they were punished down to I think close to 6, if not more than 6%. But then quickly rebounded throughout the evening, and indeed today they actually tried to run it up to even. I'm pretty sure it hit the 550s, and then retraced a little bit, but being down 3.5%, 3.6%, depends on which ticker you pick, Google L or Goog, is pretty impressive given what they could have done with it. IBM also was punished real hard today. I got lucky with put spreads on there, and they played out 2 to penny to my put spread. Sometimes we get lucky, but they too were punished. But two different stories there, and I'll get into that a little bit later. Now, the more impressive thing that didn't get any coverage today came from the 10-year. I didn't hear anybody cover the fact that, let me bring it in, the 10-year was up over 3% today. This is a few days worth, and it's higher than it's been in a while, and nobody mentioned that. This right here is the champion of the day, in my opinion. I bet you without this, we would have had a much worse day. So thank you for the 10-year rebound. It's up over 27 now again. Yesterday it was under 26, so that's an incredible move for the 10-year in just 2 days, maybe 24 hours. Another reason why we did not have a debacle today were the was the TLT and and the yen. They both were down, although the TLT was down over 1% all day. It was a chug down, and this is represented right here. It tried to make a rebound at the end, but it didn't go anywhere. And the yen was kind of on the quiet side as well. It was down a little bit, but the trend I like. And if I zoom out to about 180 days worth. These two red lines are my own drawings. It's where we got in trouble. So now we're ping-ponging up and down, and we are towards the bottom of that range. Hopefully we'll break it down so we can sever that relationship of inversely trading yen TLT versus the markets and the TNX. We've been tick for tick up until the last 3 days. I've seen simultaneous and in the same direction moves in those tickers, which makes me happy. Maybe we'll sever. Let me see if I can zoom out on the TLT. You can see a definite, if I draw crudely, there's a channel where it's trading, right? And it has a lot of fans out there that the TLT is going to continue rallying. Today it was towards the lower end of it, probably just in the middle of it. They're saying that it's going to bounce and go back up. I don't care if it does or it doesn't. All I care about is that the markets don't trade accordingly tick for tick. We tend to obsess over it and then we forget about it for a little bit. So if it wants to continue doing that and without us reacting like mad, then so be it. Noteworthy mentions today will go to CMG, obviously Chipotle Mexican Group. Oh my goodness. Wow. Aftermarket or pre-open, I should say, in the 600. You can see it right here. End of the day at 519. Yes, a candle like you haven't seen in a long time. As a matter of fact, I don't think they have ever seen it. Let me go to CMG. I believe I have it in here. I'm just going to jump into it just because I couldn't resist. Look at the size of that candle. I don't see any candles like that. So now it not only um, had that candle, but look at the volume, almost 4 million. So this the volume just eclipsed everything else. All the other, even that giant gap up, this giant gap up, it's almost double. So pretty scary. So what I said today is I sent out a note saying that a candle like this deserves respect. What does that mean? It means that it's uncharted territory. It's something you don't try to catch. If anything, you try to capitalize on with a lotto style trade, and which is what I did. I took straight puts into next week, banking on the fact that leaving today, um, no money manager is going to have anything good to draw on as to what happened today to Chipotle. So it is likely to not have any buyers on Monday, so it will likely have some more selling going on. So I bought straight up puts. It's money that I considered thrown in the trash, and I will not be sad if it went away. So this is my bet on it, just straight up puts on another move down on Monday. If I'm wrong, so be it. I'll try to put them to work by selling against them, but it's a lotto style. When you buy a lotto ticket, you don't try to return it. So I took that today. So back to what went on today. I wanted to show that we can we can have a great day without showing it in the actual results. So a plus 0.2% on indices, for example, is really great today because of what could have happened that didn't happen. Okay, another good thing that happened today is the VIX. It got crushed. I had a note out on that day right here, which is the peak, the recent peak, when it inched up on 18, and that was on 411, just 6 days ago. I posted a note out there. It's public. You can go find it on Twitter and on the website as well, MarketFi, that when it hits in the last 12, 18 months, maybe even 24, whenever it hit this level, it doesn't stay there long. Sure enough, it tried the next couple of days to repeat. It didn't. It failed. And today, guess where it is? Back to its lows, back to yellow. So the VIX was kind of telling me, don't worry about all the longs that you have. Hang in there. So two things happened again today that are important: the VIX and that ugly pair trade that I mentioned earlier, the TLT, and the yen versus the market and the 10-year. So those two things are very encouraging me. Now, on the worrisome side, of course, we've got headlines looming. I thought that today, that's another good thing, I thought that today would be a little more selling pressure going to close because people would want to lighten up a little bit their books going into a long weekend, especially when we have possible Ukraine negative headlines that can pop up over 3 days. But then late in the day, we had politicians hitting the airways saying that, wait a minute, we might have a deal here. We're still talking. We're still trying to make it not so volatile. I'm trying to forget the word they're using. But anyway, the markets felt good about it, and fewer people hit the sell buttons as they would have had they not heard that from politicians. I don't know if they did it on purpose or not. I don't know, but it played out pretty good. Now, before I go any further, I also want to revisit the levels that we had for today. Today, I had, in the pre-open note that I sent out, I had a few levels picked out, and one of which was on the SPX. The SPX, I said that 1850 still remains the highest peak as far as highest point of interest, and we tried to get close to it, probably just to flush some of the option holders there. And then I also said that 1875 is going to be 1870, 75 is going to be resistance, and most likely we won't break it. So selling short above that will work today. And the high was 1869.63. So if someone listened and followed, then they made money on that trade. And I also said that 1865 is a good pin for the week today, obviously, and it closed at 1864.85. So this one played out almost textbook. I didn't make it up. I mean, I was just reading the tea leaves that were in front of me. Same with Apple. I've said all along for the last weeks and months, actually, that it is my gauge for the market. When the selling was going on, I said if Apple defends its 505 to 515 area vigorously, then I feel good about the markets rounding the bottom, and I was right about that. Why that level? It's the level where the company itself, Apple corporate, jumped into the open market and defended its price. It's also where the whales like Icon and all the money managers jumped in and defended that level. So if they had given up on it, then I would have completely flipped and went negative on the whole market. But as long as Apple was defending, I think 511 was the lowest it came down to. I'm not sure in the last couple of days. But the point is, it defended well and it rebounded. That doesn't mean I go out and buy it. As a matter of fact, I've also been saying, don't chase it, don't chase it. So this week, this morning's pre-open note said Apple likely pin is 520. However, it has resistance at starting at 522.5, I think, but I definitely said 525 should be impenetrable for it today, and I got criticized a little bit about that. But regardless, yes, it extended to 527 during the day, but it didn't run away from 525. And where did it close? At 524.90 something, 94. So missed it by 6 pennies as far as what's going to be the roof. The point was not to actually nail the pin on that one, but to save people money from chasing it. So you see it running to 527, suddenly you get that anxious feeling inside that you want to chase it, and you start buying options, calls, or buying the stock, expecting it's going to run up to no end. My point was, don't chase it. And if you didn't, then you saved yourself some money. Now, next week, completely different story. Next week, I won't even look at the open interest for Apple just because it's got earnings coming up. And the only play I will do into earnings is another lotto play. And I have a feeling they're going to blow it out of the water. Just like everybody was expecting Google to blow it out of the water, I think Apple is going to blow it out of the water. And I may take a flyer, maybe even lay down a couple $1,000s on a long bet on Apple. It's money I'm willing to throw away, so it's lotto style. I know it's a lot of money, but I believe it's worth the bet. And I'm going to do it straightforward. I'm not going to get too fancy, too cutesy. It's just either straight out calls or call spreads probably, and not too far out of the money to where I need a huge jump up. So Apple, lotto, next week, most likely on the upside. When I'll put it on, don't know. I'll decide next week. Sometimes I put it on early and then it starts running up and then I cash out early. It's like free lotto ticket. So next week, Apple lotto only. Okay, so it's going to be tricky coming into Monday, but I think we will have a chance at continuing the momentum, the positive momentum into Monday if number one, we don't have any escalation that's on the global level. In other words, if there's escalation within Ukraine, like Ukraine's the new interim self-appointed government that overthrew the legitimate government in Ukraine, wanted to continue fighting the terrorism, which I'm quoting here, of the people who don't want them there, and the media is calling them pro-Russian Ukrainians. That doesn't worry me as much. As long as the global, Russia, United States, Germany, these kinds of global entities stay out of it, and stay calm, start and continue talking nice, like they have been, then I'm okay. And that's one thing. I want that to be not inflammatory. The next thing is I want to have the status quo continue from Asia. In other words, I don't want any news from Asia that's not expected. No surprises. So if we don't get these two, we should be able to continue upwards momentum. I do have a few puts just to cover me, and one of which is Chipotle. I already mentioned that. I took the puts in that. So I figured I can go long quality names like Apple or Google or whatever one might choose. I won't choose Apple because of the earnings. And but I will hedge my bet by taking some puts into some high flyers, and we know how high flyers have not been flying high lately. And if they have, it's whipsaw. Today, Chipotle at one point was up over 4%. Last time I peeked, I don't know exactly where it was over 4% percentage-wise, but it's like a 10-point swing in one day. That is massive. So you can't bank on anything. Also, Priceline, I didn't take a peek on where it ended, but at one point it was in the 20s. Let me see if we can see where Priceline ended up. Whoops. I don't know why that does that. Okay, skip that. That's a bug in the system. Thinkorswim. Okay, Priceline was 18.25 almost, and closed $25. A little under $20 from there. So a big swing intraday. So the moment. My point is, you can short the momentum. I feel better shorting the market by shorting momentum stocks, since they're the whipping boy of the of late. Why wouldn't I short it using a momentum stock that's going to run a lot faster than the market? So if I were to buy a put, I'd buy it in a Tesla or a Priceline or a CMG, just because I know it's going to go down a lot faster than the market. This way I cover my longs. So that's a point. Now I want to continue on Monday, after assuming the open will go fine. I want to monitor this diversion in the pair trade. If indeed it's going away, then I'm going to be a lot braver in my trading. I'm going to monitor the VIX crush, as I call it today. If it stays cool, calm, collected down there, and it doesn't bounce around 2-3 points just based on a little headline, also I'm going to be even braver. I'm going to go long a few momos via calls or debit call spreads. And like I just said, I'm going to short a few momos. And the names I'm looking at are the usual suspects. We've got LinkedIn. I wanted to get into LinkedIn under 180. Well, I've had my chance, but I've chickened out of it. I did short it a little bit. I played a couple of trades, broke out even on them. Let's put it that way. My timing wasn't ideal. I'm looking at Amazon. I'm looking at Netflix. Had a great day today. I want to see how they behave on Monday. I'm a fan of Amazon. I'm a fan of Netflix. I'm a fan of LinkedIn. So I may I'm a fan of Priceline. I may be brave with these names, but if I am, I make sure not to load up everything at one point, on one day in all of them, and I will definitely take some shorts in some other momentums that are not in favor, like CMG and to some extent Tesla. I like the car. I don't like the stock at all. So that's the strategy for next week. So pick a few longs in the Momo is not a bad idea, but make sure to short a few just to cover your bet. Also, I'm going to write up a trade to where I see a lot of people expecting a sell-off, but everybody calls for, oh, I wish we would get a sell-off. I wish we would get a sell-off. They don't realize that if you do get a sell-off, it might build on itself and become a very serious sell-off. So you might be asking for a harmless 5 to 7%. Everybody throws up. Here we are. We inched on 10%. Everybody lost their mind. Well, it could have gotten a lot worse. So anyway, I see a lot of notes out there, and the downside on the SPX looks like it's in the high 17s. So let's say 1770. So if I'm aiming to see a drawdown to 1780 or so, I may buy a put spread down there, and I'm going to do a silly thing. I don't want to waste my money because I'm not bearish. If I'm not bearish, what I'll do is I'll sell a credit put spread lower than it. So the idea is draw the price down, so if everybody's right. So I'm taking a bet on everybody being right that we're going to have a sell-off, and the sell-off happens. My max risk is the money I outlay up front, in theory, because if the price goes to zero, the first spread will be fully priced, the second spread will be fully priced. I'll break even. I would be lost. I would have lost the money I outlaid. So I'll do a put spread, say at 1785.80, and then I'll sell a put spread at 17 say 70.65. So ideally, I want the price to SPX to drop down through the first spread to be fully priced in my favor because that's an asset, and I want it to come as close to the liability as possible without touching it, which is the second spread that I sold of equal amounts. So that way I can cover myself for another 10% or 7% down without having to spend a lot of money. That's one idea to do it. If you need more details about something like that, send me an email. These are not typical trades. You won't find them out there. Not too many people will put them out there for fear of mockery. Me, I don't care. So these were the few names that I wanted to touch on. So now, since I want to kill a few more minutes, I want to run through a few other ones that I usually look at. First of all, I want to revisit the NASDAQ to show you how scary of a drop it was, okay? Now, these lines, I know there are a lot of lines, but I usually bold them, and the ones that mean something to me. The green line here was very important for us to hold. That day right here, this candle right here, where that was 415, a couple of days ago, that was so significant because we touched this support level from which we've bounced a couple of times, and that same level was actual roof a couple of times, and then from which we break out. And then we revisited, they rejected it hard, long candle, doji in favor of a bull, and zoom, long candle, doji in favor of a bull, and hopefully we can repeat that zoom. I don't want it to rip. I just want it to just don't sell for no reason. And we did not have a fundamental reason to sell this time because the fundamentals have not changed. The sentiment changed, not the fundamentals. Small caps also look like a whole bunch of stuff. I'm going to run through these charts, and this period from here to here looks the same on all of these high flyers. Highs, and then they're revisiting some really important levels from which they're going to spring up or break down completely. So the small caps have a nice tight range. Iron condors work in this case. I'll sell some spreads there. We just talked about the SPX. Same thing, although the SPX held up a lot better than everybody. This is where that stupid yen run-up started, the yen trade, I call it. The yen trade, everybody talks about the carry trade, how much money there is in it, and that's why, when yen runs up, the carry trade starts losing money, and if there's trillions in it, somebody's got to sell something to cover their losses over there and margin calls. So. The VIX we talked about, Apple we've talked about. Apple defended that one important level. This is the important level right here, the red one. Why is it important? I may have mentioned it last time. It's important enough for me to mention it again. Watch this. That's that level I was talking about, that red thick line. Well, that level is from where it broke down and revisited under the 400, under 400 price. So everybody's invested in that level. That's why I drew it as a line in the sand. It's not an exact line in the sand, but it does work. Amazon got tested hard. I saw Head and Shoulders. I thought it was going to revisit the sub 300s, but yesterday it rejected it. 2 days ago again, just like see, if you wipe out the name, it looks like the NASDAQ, right? Boom, boom, revisiting some important levels. Baidu, I haven't looked at it recently. Same thing, although it was red today. I haven't traded Baidu in a while. It's got earnings coming up, so that's worthy of a lotto ticket. BlackRock, that's an ugly candle. I missed the earnings play on it. I spaced it out. I was going to buy a lotto ticket in it. CF, Buffalo Wild Wings, forget about it. CF has fallen from grace. I wanted to settle down so I can start trading again. CMG, we already talked about. CRM and company, by that I mean VMware CRM, they're it looks like CRM is peaking out of that stupid downtrend that it had. I need another day. I'm not going to chase it right here. There's some other good stuff to worry about other than these guys. A good company, a well-liked company, but too soon for me. Goldman Sachs is reported obviously today, and I saw 3 falling peaks, and it sure came to life, and I hit my target exactly, and then I saw, you know what, it's going to go down a little bit more, and it did past my target for it, but again it's revisiting this really important line here, but it could have broken down more from there. So the financials were hated, so I waited. I'd rather miss an up than anything. And today, they reported everybody ran it up $4.50 or whatever in the pre-market. I think I stopped looking at it, and then what did they close at? Up 22 cents. So I guess it's better than being shellacked like J.P. Morgan a few days ago on earnings. So up 22 cents is the new pop, I guess, in financials. So point is, I'm going to wait to see confirmation that it can break that downtrend. I'm waiting. I want to go long it, I promise. IBM, I want to go short it, I promise. I shorted it this week and I succeeded 100%. I want to repeat it on Monday on any weakness because just like CMG, it's a big move, and also people love to sell this stock this year, so I'm going to jump on board. I said I'd like LinkedIn. I do like it, but look at this heartbreaker, right? A whole year's work gone, and now it's trying to rebuild itself. I'm going to wait a little bit more. I want to see what happens next. MasterCard, again, I wanted to jump in, but just too many dang headlines. Too many headlines. I'm staying out of that, and Visa. I want to go along them, but just too many headlines. You know what? I didn't revisit Panera in a while. Am I going to drop? Yeah, still there. I won't go long it or anything. Too many. It's too violent. There's not enough premium for me to mess around with. Netflix, I said I like. But again, you see the pattern, it spikes and then comes back down to important levels. I'm comfortable with Netflix. This sell-off started way before the market sell-off, and I think it washed out a whole bunch of people that wanted to get out and cash it in. Still a risky move, but not as risky as it was, say, just a couple weeks ago. So in general, I'm still of the opinion that there's no doom with the current givens. In other words, the current variables that we have, the doom scenario is not a foregone conclusion, because we know what we know, and we will need a new shoe to drop in order for us to take a tumble as a market. The shoe can drop. I'm not saying it couldn't, but it can drop at any point in time. So do you not trade at all, or you trade what you have in your hands? I know what I have on my hands. I place trades that I can afford to lose, and if I lose on them, so be it. But if you want to trade, you have to trade. You can't be on the sidelines because you're expecting doom. If you're on the sidelines in order to line up better timing to enter, that's one thing. But if you're on the sidelines just because you expect doom and you're going to buy when the doom happens, well, you may be waiting a long time. So the fundamentals, hopefully we will go back to trading fundamentals, and with the headlines abating from Russia or Ukraine, I should say, slip of the tongue, then we can go back to trading fundamentals and economic data. We used to complain about waiting for the Thursday report, for the Friday report. I wish we would go back to that. Now we're like bracing for impact from politicians and currency trades. So anyway, fundamental trading is needed, and I hope it comes back soon enough. Meanwhile, whatever profits I see, I book early. So if I put a trade on and I see some profits from it, I don't wait for an ideal time to get out of it. I book the profit. It might not be the best time to book it, but a profit is a profit. And if a trade goes against me, I book the loss, because we all know a 2% down day can end up at 4%. They sold Google 4% in one day on no news. Google. They treated it like it was a company that makes no money. So in that kind of environment, you have to act fast, book profits fast. Imagine somebody that had profits with the CMG call move today, and they didn't book it. Now they have like a terrible loss. So book fast. Either way, profits or losses. Anyway, sorry for the long message. It's about 29 minutes. I appreciate your time, and I do my best to add value. Let me know if you need to see anything different, or if you have any special requests of tickers that I don't usually cover. Again, Nick Shaheen here for Benzinga and MarketFi. Create income with option spreads. Have a good weekend.